Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to my video today. And as usual, don't forget to like this video and please subscribe to my channel. That will be really great. So I haven't done a presentation for a while, so I'm sorry about that, but I've been busy over the last couple of weeks or so. So today I'm going to be giving you an update of how my portfolio is going, a little bit more about the strategy, the performance, and I'll be talking over a number of areas of some of the main things that have happened in the news over the last week. So I will try to, as much as possible, to provide regular communication with you and provide updates on the portfolio. So I will get started. So our portfolio did pretty well last week. We were up about 4.9% overall for the week. I've been quite happy so far with our performance so far this year. Our portfolio is up about 3.97% overall for the year, and that's pretty good because it was a little bit of a difficult start in January for the portfolio, but we have since kind of roared back and have done pretty well in February. So our portfolio is up about 3.97. If we compare that to the Nasdaq and the S&P 500, which is 5.1 and 4.9 respectively. I think we've also got to bear in mind as well that a lot of Nasdaq gains and S&P gains have come from the Magnificent Seven. A lot of Nvidia, Microsoft, and a few Amazon, etc., Meta are driving those returns, and it's been quite an uneven distribution of results from the Nasdaq. So pretty happy overall with our results so far in 2024. And Bitcoin is up about 23.22% as well. So if we look at last week, as I said, our portfolio was up 4.9%. Compare that with the other indexes. The Nasdaq was down 1.3% for the week, and S&P 500 was down about 0.4% for the week, and Bitcoin was up about 3.4%. So our portfolio did pretty well last week, and that was mainly because we had some specific positions that did very well last week, stock positions that did very well as Bitcoin, which performed pretty well, and some other of my altcoin projects, specifically HBAR, so Hedera Hash Graph, performed pretty well last week and had some good breakouts. So all in all, I'm pretty happy with the performance at the beginning of 2024, but obviously it's still early on in the year, and we're kind of building upon solid performance from last year as well. So if we look at the kind of main news from last week, I think last week was really, there was a lot of focus on the inflation data that came out. And I think that's kind of what led to one of the first weeks of the year in which the markets and the indices suffered, minor declines. So last week, the labor department, they reported the consumer prices had risen 0.3% in January, slightly above the consensus expectations of around 0.2%. So obviously the market kind of sold off a little bit on that because there's a lot of concern that inflation might start to spike again, might get sticky, in which case then it will make it a lot more difficult for the Fed to kind of action the interest rate cuts that had kind of been on the cards for the year. So obviously that's higher than the Federal Reserve's target, which is about 2%. And like previously before that, they had been lowering those on a year-on-year basis very slowly. And now we're starting to see kind of some signs that inflation might be a bit more stubborn, especially because of the kind of freighting and the cargo costs are increasing because of the issues between Israel and Palestine, etc., and it's causing some potential supply chain bottlenecks, which could have an effect on inflation. We've also seen some signs of weaker growth, and that has been shown in the retail sales data that was released last week, in which we saw the retail sales plummet by about 0.8% in January. So we're seeing a kind of a weaker retail spend, and this could be a sign that consumers are starting to, run out of money, and they have a high level of credit, and they might need to tighten their purse strings. We also, if we look at the interest rates, the futures markets have ended last week. They're pricing in now only a 10.5% chance of a rate cut in March. And that is compared with just a month previously, it was estimated at about 65% chance. So I think the consensus now is that interest rate cuts are very unlikely to start before May 2024, whereas previously it was kind of March 2024 that the markets were pricing in. So I think we're seeing a little bit of an adjustment because of that. In my opinion, I never thought that interest rates were likely to be cut in March. I thought it was too early. I think the Fed were going to be very careful not to cut interest rates too quickly. And that is because they want to make sure that inflation is kind of in the rearview mirror before they start to make those changes, especially considering some of those data is lagging. We also saw in Europe, in the UK specifically, we saw that it slipped officially into recession. And that the expectations now are that the Bank of England could start to cut interest rates as soon as June. And this is because obviously it slipped into recession, and it really kind of showing that in the UK, the cost of living crisis, etc., people are starting to run out of money, and they can't afford to live anymore. So I think it's quite likely that we're going to see those interest rates kind of sooner rather than later in the UK. We also seen the European Commission has cut its forecast for the Eurozone economic growth in 2024 to 0.8% from 1.2% predicted earlier in November. So the growth is lower than had been expected just a few months ago in Europe. In China, it was obviously a very difficult performance for China towards the back end of 2023. And also in January of 2024, we saw the Chinese and Hong Kong indexes hit multi-year lows. However, we have seen a little bit of a bounce back the last kind of week or two in China stocks. And one of the key pieces of data that was released last week was that the China Lunar New Year was there was a lot more kind of spending and a lot more economic activity over this period than the previous year. But it has to be noted as well that there was some disruption the previous year because of kind of towards the end of COVID-19. So I think we have to take that data with a pinch of salt. But I think we are starting to see early signs that the Chinese economy could be starting to recover, albeit quite slightly. The Chinese government have put in a lot of kind of incentives and stimulus for businesses to try and promote future growth. We'll have to see how that goes. But what I can say about China is that the valuations are extremely low levels compared with the US and other developed economies. Of course, there are higher risks involved in that, but I also think there's a lot of asymmetric upside if that is sized correctly, which I think our portfolio should be. If we look at the top 3 performing stocks of last week, our top performing stock was Coinbase, and that was up about 25.7%. And the main reason why Coinbase was up is that they reported their earnings, and during the earnings we saw a lot of increases in the volume of crypto trading, and the transactions revenue was up pretty significantly, and we're seeing really early signs that we could be in a multi-year bull cycle for crypto, and that retail customers, although they are slow to come back, they are starting to participate. We also seen some increase in Coinbase's institutional products and trading. Obviously, Coinbase is also the custodian for some of the largest of the new Bitcoin spot ETFs, and they will benefit from that as well in the future. So good signs, even though last year there was a huge amount of upside in Coinbase. I still think that in 2024, as we kind of move closer to all-time highs in crypto, that Coinbase will be a big recipient of future gains. The second best performing stock in our portfolio last week was Synthomer, and that was up about 15.54%. And the third best performing stock in our portfolio last week was Magnite, which was up about 12.42%. And this is a sell-side advertising tech platform. So they performed pretty well last week. I usually just talk about the best performing stocks last week, but one of the big drivers in our portfolio last week was Hedera Hashgraph, which is a crypto project. HBAR has been lagging a little bit, kind of towards the end of 2023 and beginning of 2024, when some of the other altcoins broke out. It didn't break out as much from the lows as some of the other projects, but it's starting to pick up a lot when they have a huge amount of partnerships. I'm incredibly bullish on HBAR, and it's actually our third largest crypto position in our portfolio, behind Bitcoin and Ethereum, which obviously blue chip projects. But I think that it's got a huge amount of upside ahead of it, and I'm glad that it's starting to pick up speed, and it did certainly help our portfolio last week. If we go on our Death by Charts edition now, I'm just going to be going over just a couple of different charts. The chart on your left is the core CPI year-on-year figures. So what we can see is that the latest CPI report has reinforced that the overall CPI is coming in at 3.1%. That was slightly above the expectations for a decline to 3%. So it was, it was a bit higher than the expectations. However, if we kind of look on it on a year-on-year basis, it is starting to come down. If we look at the core CPI, which obviously excludes food and energy, we also see that it was hotter than anticipated at 3.9% versus the 3.7% consensus estimate. This might seem disappointing because it was against expectations. It was higher than expectations. However, we must know that this is still lower than the lowest core inflation reading. It's the lowest that we've seen since August 2021. So there is progress being made. The chart to the right I wanted to show is the US Consumer Price Index, which excludes shelter. Shelter was one of the largest contributors to that CPI figure being higher than anticipated. So if you remove that shelter from the index, CPI has increased only 1.5% over the last year. So that's the 8th consecutive month below 2%. So the CPI for shelter has been quite high, but we do know that there is a lagging effect for shelter. It does take quite a long time for those kind of higher interest rates to work their way through the system into mortgages, etc., and for prices of properties, rent, etc., to start to go down. and demand to start to go down for properties. So I think a lot of that could be just lagging effects. Okay, we look at the third chart to the left. What we have seen in terms of interest rates expectations was only a month ago, the market was pricing in a 77% probability of a rate cut in March. Today, those odds are below 10%. So, as I said, the consensus estimate is that rates are likely to start being cut in May 2024 rather than initially what was expected in March 2024. Last chart that I just wanted to show you was the market expectations for the Fed funds rate, which is interest rate expectations. So previously, the market was pricing in up to 6 or 7 rate cuts throughout 2024. So I always thought that this was quite unlikely, and this was like probably the most positive and case scenario, which was extremely unlikely, given that inflation is quite stubborn. Now the markets are only pricing in potentially 4 Fed cuts through this year, which I think is much more realistic. So those first Fed cuts are probably expected in June, pushed back from March. So I'm now just going to talk about what's happening in the crypto market. I'm going to be talking about the crypto news and views. So I'm just going to be focusing on just a couple of areas. So Bitcoin and crypto in general has performed pretty well. We saw some extremely good bounce backs in 2023 and 2024. And one of those main drivers was the Bitcoin spot ETFs, which were approved about 6 to 8 weeks ago. I can't remember exactly. But what we have seen is we have seen historic levels of inflows, and actually much higher than expected. So it has been an extremely successful launch of the Bitcoin ETFs. So I have to take you like a step back further and tell you kind of what the landscape was like before the Bitcoin spot ETF. So there was something called the Grayscale fund, and the Grayscale fund, which is GBTC ticker, was a fund basically which was actually trading below its intrinsic value. So it was operating at a reduced cost, at a discount. So what happened is we saw a lot of people take up arbitrage trades. And what that means is they wanted to kind of benefit from the difference between what the discount was to what the price would be if the Bitcoin spot ETFs were approved and Grayscale became an ETF. That happened this year, and what that meant was that the funds that were already in there that were locked, because it was a kind of a closed fund, now was being able to be withdrawn. So what we saw is some of those arbitrage traders closed out at a profit and took their profits, which was some of the outflows. And then also because Grayscale had been obviously locked up for a long period of time, a lot of people had the first liquidity opportunity to be able to take profits as well. And thirdly, the Grayscale ETF, when it was approved, they had the highest fees at about 1.5%. And what that really meant was that when that was approved, a lot of people that were in that fund decided that the fees were too high and they were going to move those funds to the other spot ETFs. So what they had to do first was they had to sell those, and then they had to wait for a period for that to settle, etc., before buying into the new ETFs. So first week or two, we saw a lot of outflows from GBTC, And some days we actually saw more outflows and inflows into the Bitcoin spot ETFs. However, that has eased up significantly. So what we're seeing is really historic levels of inflows into the new Bitcoin spot ETFs, particularly BlackRock, particularly Fidelity, which are the two largest. And now we are starting to see decrease amount of outflows from GBTC. And what this is leading is to really a kind of a demand spike and a supply crunch. So a lot of these providers are finding it very difficult to get Bitcoin from the OTC desk. They're actually starting to run out of Bitcoin from over-the-counter trading, and of course they have to make up for that by buying into the market from exchanges, etc., which has had a big effect on the price. So we're talking now the Bitcoin price has been over 50,000 for a while, and I think while there's this difference between supply and demand, I think that the Bitcoin price could go a hell of a lot higher. So I do expect that we do hit all-time highs before the end of 2024. However, what I want to say is that there are going to be periods of volatility, and there will be periods where, for example, there are drawbacks in the Bitcoin and crypto prices over the month. So it's not going to be all up from here, but I think it's quite likely, because of some of the catalysts that are happening at the moment. I think it's quite likely that we see all-time highs in 2024 at some stage. Previously, in other cycles, we tended to see hit an all-time high about 4 to 6 months after the halving. I do think it could be a little bit earlier because of the change in supply-demand dynamics, but the halving is due to happen fairly soon, kind of mid-April. So probably 6 to 8 weeks away from the halving occurring, which will put further supply pressure and could cause a further supply shock. We also seen that over 70% of Bitcoin hasn't moved in the last year or so. So there is already a kind of a small supply on exchanges for people to buy. So yeah, I think there's a huge amount of catalysts for Bitcoin in 2024 and 2025. So that's a little bit on the ETF and Bitcoin situation. Ethereum as well, there's been a lot of applications for Ethereum spot ETFs. I think Ethereum and the money manager is going to use a very similar argument with the SEC to get that approved. In 2023, we saw the approval of Ethereum futures ETFs. And what that means, because of the precedence that was actually set in the Bitcoin case, it's extremely likely that the Ethereum spot ETFs will have to be approved because of what happened in the court case between the providers and the Bitcoin spot ETF. Because what the judge said is you can't treat futures ETFs any differently to the way you treat a spot ETF. So unless the SEC can come up with other arguments on why it's different, I think it's quite likely that's going to get approved, and that will again fuel further demand for Ethereum. Obviously, Ethereum as well has become deflationary when it moved over to proof of stake, etc. So the more transactions that happen, etc., the more deflationary it becomes over time. So yeah, I'm pretty positive about Ethereum as well, but I think it just might take a little bit of time to play out. And the way that things usually happen in the crypto markets is usually see Bitcoin move first, because although for traditional people in traditional markets, it might seem like a risk asset, in the crypto market, it's the least risky of all assets. And what you see is kind of this risk curve as the cycle progresses. So it starts off with Bitcoin, then we see Ethereum gains, and then over to other layer ones, layer twos, and then over to smaller cap projects and other narratives as well. And then it kind of works its way out through the risk curve. So I think we're starting to see those moves, but I still think we're pretty early in this bull market. So very interesting times ahead. We're also seeing really high numbers of venture capital funds backing some crypto projects, different crypto narratives from deep into gaming, etc. And we're kind of seeing record numbers in terms of VC investments. And what that usually leads to is kind of more development over time, more projects, more investments in that space. And we usually see the fruits of the hard-earned dollars later on in the markets when we see developed projects. So it just kind of leads to more money overall in the overall ecosystem. So last chart I just wanted to show you really was just to show the power of the Bitcoin ETF. And if we look at it just for last week, we're looking at inflows to the Bitcoin ETFs at 2.27 billion over the last week. And just to show you what a big success it's actually been, if we compare that to other ETF launches and some of the largest ETFs that are trading at the moment, we're seeing really high flows of Bitcoin. So there is a lot of demand. But what I want to say as well on that is that it hasn't really even got started, because there's a lot of brokers that are still yet to even list the Bitcoin spot ETFs on their platform, because they have to go through various levels of approval internally, etc., their risk managers or whatever it might be. And we haven't seen a lot of those sales advisors also advising their clients yet to put Bitcoin spot ETFs into their portfolio. They've kind of, at the moment, they've been kind of organic people who heard about the Bitcoin spot ETFs and wanted to add it to their portfolio, and have actually been requesting it, rather than the sales teams for the money managers actually recommending them to their clients. So that will come later. So I actually expect those inflows to increase over time as it starts to provide a larger footprint. So I'm going to leave it there today. I don't want to make this presentation too long. Also, I just want to thank all my new copiers and all the existing copiers that have been with me for a long time. I really appreciate all your patience, and I really appreciate all your support over this time. If you haven't joined my Discord group yet, please join the Discord group. We have a really awesome community of people who are regularly talking about everything that's going on in the markets. You can ask me any questions that you have at any time. So I'm always on hand to support you. And as I said, I will try to do these communications more regularly with you on my different social media platforms. But until then, I really hope you have a great week ahead, and I hope we continue to build on this strong performance for 2024. Thank you.